What's going on, everybody? So I want to make a video just for my channel members. This is a request video while I'm drinking my coffee and about to go to do some work. So I got a question. I believe the channel member was Mr. Room. Shout out to Mr. Room. Shout out to all my channel members. And he asked me my opinion on REITs. What is a REIT? A REIT is a real estate investment trust. That's all it is. R-E-I-T. And what that means is you're investing in a stock. The stock is a trust for real estate. A lot of times, REITs are specific to a type of real estate. For example, you have SLG, which is a REIT for U.S. commercial properties. This is really hot right now. A lot of people push this product. I believe Matt Money talks about it a lot. You have SPG, Simon Property Group. They are the largest owner of malls within the United States. And then there's a bunch of different REITs. Some of them are for single family, some of them for commercial, some of them for wholesalers. For example, if you do storage REITs, right? Yeah, there's storage companies, but essentially it's a real estate for storage. So that's what a REIT is. REITs pay dividends. The dividends is you sharing profits, okay? It's profit sharing. For me, the question is a REIT worth it or not? And the answer is yes and no. For somebody like me that does real estate, can own his own real estate, and actually collects money from people to invest with me to do real estate, it's not worth it. And I'll explain why. For somebody that has no access to real estate, has no ability to invest with somebody in real estate, and has no ability or the funds to actually buy real estate, it is worth it if you want exposure in real estate. You see, there is no tax incentive for you to invest in a REIT, but there are tons of tax incentives for you to own your own real estate. So with a REIT, you got to pay managing partners, you got to pay managers, you got to pay construction companies, you got to pay maintenance crew, you got to pay for a property manager. So you might say, well, Adam, these are things you need to pay for anyways if you own your own real estate. And the answer is yes, except you don't know who they're hiring. You don't know if those companies are owned by any of the officers or their family members. And I know on the surface, you might think that doesn't happen, but it does happen. So you don't know what bids they're getting, right? And what they're getting under the table. The point is you cannot control anything. And I'm not accusing anybody of doing that, but you can't control it. Also, the dividends that you're collecting is short-term capital gains, which means you'll get taxed on your personal tax bracket, which can be quite high, especially if you live in states that are full state taxes, like a California or New York. You could be paying like 30 to 40% depending on your tax bracket, which really sucks. Also, the REIT's dividends go up and down because you are at the mercy of real estate trends. And right now, real estate trends are very scary. Property prices are all-time highs, but so are real estate mortgage rates, and commercial real estate is super scary. So you have a company like Simon's, who's giving you like 6.5% dividend, and you have SLG, which is SLG. I think the abbreviation is SLG. It's like Green Real Estate Corp, something like this. They're giving you like 10%, but those dividends have been cut. At one point, they were a lot higher. So that's the negatives about real estate for me. You don't control anything. And the dividends is not like it's amazing dividends, right? It's not like it's something crazy. There are a lot better dividend stocks out there. For example, for me, I rather invest in Truist Financial, which is a 6.5% dividend, and I believe that there's going to be appreciation in the future, than real estate right now. Personal preference. On the flip side, if you have access to buying your own real estate or investing into real estate as a conglomerate, like for example, there's like, let's say I have a piece of property, somebody wants to invest with me, and that's not what I'm offering you guys. Well, look at this. Whatever you buy the property for, you get something called depreciation of 27.5 years, which means you take the property, let's say the property is 500,000, you subtract 10% for the land, you're left with 450,000, you take 450,000, you divide it by 27.5, and that number is tax-free, which comes out to approximately 50%. So 50% of all of the rents that you're going to be collecting is tax-free, no taxes on that money. Also, you get tons and tons of write-offs when it comes to real estate, especially if you're managing it even partially. Gas, tolls, tools, things like that. Also, when you refinance a property, you can pull all your money out. You can't do that with these REITs. The REITs pass down the savings to people, but at the end of the day, they're the ones making all the decisions. They're making all the profits. You're just getting a very, very small taste of the profits. You can make a lot more money in personal real estate. To double up your money in 5 to 7 years when it comes to real estate is quite normal. It's not like something that's very difficult to do. And essentially, you still keep the property, and now you're just collecting rents, 100% profit, essentially. When you're investing in REITs, that's not going to happen. So now, if REITs are not great, and you're in a position where you cannot own your own property, there are conglomerates where you can partner up with people. Where do you find these type of people? Where do you find people like me who take on partners? And I'm not offering this for you guys, so don't get it twisted. For example, when I take a partner, I put in 30%, they put in 70%. When we sell the property or we cash out the property, they first take all their money back. I take all my money back, so 70-30. That last 20% is anything that's profit when we sell gets divided 50-50. For example, let's say we buy a piece of property, it's $1 million. I put in 300 grand, they put in 700 grand. That's $1 million. If we sell it for 1.5, they take their first 700, I take my first 300, and the next 500,000, which is the profit, we take 50-50, 250 and 250. For example, there are people in your area, there are people in your neighborhood that do the same exact thing. You just don't know about them because you did not do the research, you didn't look for them. Don't be confused. There's a lot of people that take on smaller investors. Now, smaller investors, it all depends on which area you're in. If you're in the Midwest, you can probably do something with 100K. You don't need anybody. Guys, I really want to tell you something. If you should really look into real estate because you don't need a partner. You can do it on your own. There's so many ways. And you think I knew something when I started? No, I learned it. There's groups of people, join real estate groups, join bigger pockets. It's a wealth of knowledge. You can get in on people's deals where a lot of people are just looking for a passive investor. Look, I don't let my partner say anything. I don't care. And they don't want to because I do a good job. Like I'm literally going to Yonkers right now, and I was there yesterday. I'm going to go tomorrow too to deal with a problem. So a lot of people that have 50K or 20K or 25K or 100K, they don't want to do nothing. They just want to invest the money, and they want to collect their dividends in the form of rent. But my dividend payment is going to be much better than 10% return on your money. And remember, when you first invest, that initial investment that you're pulling out, it's tax-free. If you refinance, it's tax-free. If you collect your rent after you take all your money out, half of it is tax-free due to the depreciation, right? I'm just giving you guys general things. So there's a huge benefit for owning real estate or partnering with somebody that actually owns real estate as opposed to a real estate investment trust. However, if you are somewhere in a different country and you think it's very difficult for you to do real estate, or you're in a place like California or New York where you just think you can't touch real estate and you don't know anybody, you can't find nobody, well then yes, a real estate investment trust is a good way for you to get exposure to real estate. Also, it is 100% passive. You don't got to do anything, but you control zero things and you get zero tax benefits. I hope this answers your questions about should you or should you not invest in real estate investment trust or not. The one that I researched is Simon's Property Group, SPG, and I don't know much about it. I just know that they're the largest mall landlord in the country. And like I said, Green real estate group. Green Street, maybe it's called something like that. I could give you guys the abbreviation if you guys want, but there's tons of them. What you guys got to do now is research different REITs and then see what type of niche they're in, and be very careful what type of niche they're in. Normally, the storage ones do well. They stay pretty much even because people will always need storage. If there's bad times and people are being evicted, they need storage for their, their stuff, because they can't take it with them until they find a house. And if times are good, they're accumulating more shit, so they need to store the old shit while they're accumulating new shit. So I think the storages would be the best, except their return, like their dividends, you're only getting like 4%, right? 5%, 3%. And is it really worth it if you got to pay half of that in taxes? I mean, it's really not that lucrative, if you ask me. But you guys do whatever you want. My job is to answer questions. Later today, I'm going to try later today or latest tomorrow, I'm going to be showing you guys a cash secured put strategy. A lot of people were asking me about puts. I already made many videos about covered calls and calls. Now I'm going to make a video about cash secured puts to form a synthetic dividend on your stocks. But I'll make that video later because I want to show you guys actual examples. Please let me know if I'm doing my job good. And my job is to explain things. If you guys don't understand what I'm saying about the REITs versus owning your own real estate, let me know. Please, please, please let me know so I can go into more details. Also, if you guys want to know what is the best type of real estate investment you could do, in my opinion, it's called a house hack, where you're buying a two-family, you live in one of the families, and you let somebody else pay off your mortgage. Yeah. Let me know if you guys want videos on real estate or something else. And again, if I'm doing a bad job, you guys let me know, because I'm assuming I'm doing a good job when I explain things. Again, shout out to Mr. Room. I believe he's the one that wanted this video. Thank you, and have a great day.